The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Make sure you can listen to us anywhere on your mobile phone at TFNN.mobi. And markets ran down, sort of a sell on the news thing going on, but those gaps filled, and then they just didn't look back, been up ever since. Right now, we got the S&P is up 11 points, the Nasdaq's up almost 25 right now. We got the Russell up 8 points with the Dow up 23. Gold's currently up 39 points with silver up 2.5%. So massive moves. They actually took place last night. China did, one of their rating agencies actually downgraded U.S. debt over in China despite the overcoming of the debacle in D.C. So that obviously had a massive impact and pushed up gold, pushed up silver, and then obviously kicked the dollar down pretty hard. Looking on over, we got copper right now. It's up, it's down a little bit now actually right now. There's not a big move in copper today. We got oil down $1.62, so a massive move down there in oil. We have natural gas is down about 0.5%. Corn is pretty flat on the day. We got soybeans up 14 points. Euro dollar up 132. Pound dollar up 214. Aussie dollar up 83. So the dollar just getting thrashed against the other FX pairs right now. We got euro yen up 8 pips. Dollar yen is down 84. Pound yen up 57. Dollar CAD down 36. And dollar franc down 10 pips on, 108 pips on the day. So, like I said, some big FX moves and some nice indice moves as well. So, one thing I want to do is we'll do a quick review on the different Forex markets, and then we're going to talk about a play that you can do today on Nadex that you can do once a quarter. Okay? So, we'll go into that and talk about some different ways to actually play the Google release that's coming out today over on the Nadex exchange. Got a call right now from Rob in Orlando. How you doing, Rob?
Thank you for taking my call.
Yeah, you bet. How's it going, man?
Good. Right now I have some gold position, but it's weekly. So I'm not sure. Right now it's 82 and 68 current market, but I'm not sure if I should get out now or tomorrow.
Where did you buy at? And right now you're...
I bought at 19.5, and now it's 82. And that's expiring tomorrow.
Yeah, I would definitely take profit on that. So what's your strike price?
No strike price, no. I just knew it was going to go up.
Okay, are you saying you bought a binary, right?
Yes, it's 1299.5.
29.5. Okay, yeah. I would definitely be taking that. I mean, one, you just went in the money this morning. So, yeah, that would, obviously you're up 300% on that trade right now. So that's an excellent trade. Good job.
I have a 1309.5 also at 12. And right now it's 68.5.
Wow, yeah, so you're about 400 or 500% on that one. That's one of the big things I highly encourage is, when you get in there and you're up like 200, 300, 400%, if you're doing these out-of-the-money binaries, you definitely want to take that profit.
So grab it and run.
Yeah, grab it and run. Because, you could have, 4 or 5 bad trades, at least 3 or 4 bad trades on that one, and just that one trade would cover them. So it is so easy for those things to pull back. Yeah, and overnight, look how much we moved. We moved like 30-something points just, in a matter of 10 minutes last night. So, you don't want to give that back.
Right, thank you.
You bet. So, excellent trade. Good job. So, I got to love Nadex, man. Just going in there making 300-400% trades and a $12, very small defined risk. Awesome. But, yeah, there's gold right there. You can see it was flat right there. Then, boom, we got the big move. Went right up to 2 deviations. Just been oscillating right at that level. And looking pretty done for the day. Always could move higher, but you never know. Different news announcements going into the end of the week after that massive surge, that massive run. it would not be surprising to see it do a bit of a pullback on that as well. And you just don't want to give it back, especially on those binary contracts. Because on binaries, you're saying that it'll expire at or above. And so when you get in a good trade like that, it flies, you make a massive profit. You don't want to risk it coming back. Always have that take profit set. And I recommend, actually, that you always have a take profit on an out-of-the-money binary as soon as you put the trade in. So even if you're going to put it up at like 90 or 95, put the take profit on. That way, because maybe overnight the thing flies, and then it pulls back. You could have taken profit and then versus giving it back. So always put those take profits in. You can always come in and decide to take it sooner. Like maybe you decide like now to take it off at 80, 85, whatever. But have at least something working in there for you just in case it moves really fast and you're not able or not around to take advantage of it. All right, so we got gold right there. Let's go ahead and check out silver and see the metals right there moving pretty big. So we got to move all the way up. This is a good example, okay? So check this out. We had silver. It flew up like gold did. Almost hit 2 deviations, but check out how it really pulled back. Came back in, moved up, and then pulled back again. So, if, let's say you went in and you bought a 22, strike, then you would be down. You could be down right now. You could be giving up all that profit. It may move back up there, but do you really want to be risking all those profits? So definitely have that take profit order in. It will serve you well. Let's take a quick look over at the indices. We'll start off with the Dow. And right here we got the Dow. It, like I said, headed on down. You had the sort of the buy on the rumor thing going, and then the sell on the news. And the market took off again this morning. Obama came on. He did a whole, I'm proud that everybody came together. At the same time, this can't keep happening. And by the way, I have these other bills out there, and I'd appreciate it, House, if you'd pass those as well. So nothing new. And trying to sandwich some compliments in with a little bit of a scolding on the Republicans. So that's his MO, whatever. But anyway, so we got about a deviation move, and be aware of this right here on the Dow. Like I said, a deviation move high to low. So always be looking at that. We go right here. We go settlement to 1. Gives us about 140-something points. Then we go from low to high. So we're basically already looking at a deviation move right there on the Dow, even though we're not up at the half deviation level. So just, be aware and tighten your stops there. Let's go ahead and look on over. We'll check out the Russell. And with the Russell right now, it's down 0.5, up 0.5. Definitely one deviation move high to low. And so really haven't seen a volume spike yet to tell us to, it's going to go the other way. But I'd just be a little bit cautious. I'd be having stops somewhere around the 1095 area on any trades I had on in the Russell right now. And then looking on over at the NASDAQ. NASDAQ really did not have that sell on the news going on. It held its ground at settlement, ran on up, and it's right now at the 0.7 deviation level. And let's check out the S&P. So on the S&P 500 right here, we got the move down, move up, 1 deviation. It's bouncing right there off that 0.7 deviation level like the NASDAQ is. And it didn't sell off as hard as the Dow. The Dow had the hardest sell off there. Of course, earnings season, everything's starting to kick into play. And so anyways, just be aware earnings season is back in play. And that's what we're going to be talking about a little bit later in the show today. So we're going to go into how to actually trade the Google trade on the US Tech 100. All right, let's go ahead and look at our currency pairs. We have the dollar CAD. So dollar CAD right here, move down. Look at that, just on down. Dollar getting weaker. CAD getting stronger comparatively. And right there, you got to move right down to 1 deviation. Solid move. Does a bounce right off of it. That's why we tighten our stops as we hit those deviations, especially those 1 deviation levels. And we'll check out the dollar franc. And the dollar franc right here, it moved down a full solid 2 deviations. So it not only went on to 1, paused for a little bit, and then just took it all the way back down. 2 deviations, a 96% move. So we got that one. Let's go ahead and check out the dollar yen. So on the dollar yen, also 1 deviation, solid move. So pretty much all the markets are getting to their points of exhaustion for the day. It doesn't mean they can't move further, but it usually means this is where they stop or turn back around. And you just want to keep those things in mind. You want to have a realistic expectation because we always want it, especially when we're going in a direction, want it to go to infinity and beyond. But you can notice that it hits this deviation level and just starts flattening out. So we got the 1 deviation flattened out. It decided to go ahead and pump on higher, which would have worked out fine because you could have had your stop right here on the close above and then moved on up. And now it's just chilling out right here at the 1.5 deviation over here on the Aussie dollar. So these deviations really help you manage your profits by trailing your stops, as well as give you potential reversal entries. And let's go and let's look at euro dollar. So on the euro dollar right now, we got to move all the way up. Nice, solid. Look at that. Straight to 2 deviations. Again, it went to 1 and all the way up, hit 2 deviations, and just literally chilling, doing nothing right now. So keep those deviations in front of you. If you have access to them, you can get access. We post them every night at 8:15, and you can get immediate access to them, so that way you can use them in your trading. And then let's check out the pound dollar and also the pound yen. So pound dollar had among the biggest moves, almost 3 deviations. That's almost a 99.7% probability move, meaning there's only like a 0.3% chance it'll keep going. So would you want to keep buying at this point? No. So this would be where you definitely would not be adding into any of your positions. You'd be tightening your stops, because the probability of that continuing higher, though it can happen, is very remote. And looking on over at the pound yen, so combining the two together, sort of got that choppiness overnight, 0.5 up to 0.7, and just chilling out at the 0.5, 0.7 level, balancing in between those right now. Couple more markets we'll wrap up on, then we'll go into detail on how these strangles work. But right over here we got the corn market. So corn ran on up to half a deviation, came on back down to settlement, just chilling out flat right now, but did have a nice oscillation move there first thing in the morning. And again, it bounced right off of it. Look at that volume spike right there, right off the deviation level, giving you a great retracement. And we'll go into soybeans. So soybeans right over here ran on up. It didn't have that pullback. It's staying up, and above 0.5 to 0.7, just bouncing in between those levels. And now let's check out our energy sector over on oil. On oil right now, we got oil moving down. It's moved down to 1.5 deviations, a solid move down. Look at this right here. We got to move right up this 1.5 deviation level. We got this volume spike just screaming for a reversal. What does the market do? It takes off right there. And we got to move right back up to the 1 deviation level. So that's a great half deviation move. Excellent trade. Could have hopped in on that one right there. Wish I would have saw that one. So, but a really good trade right there. Just bouncing right off the 1.5 deviation level with a great volume spike. All right. That gets us caught up on most of our markets across the board. So next thing is we're going to go into Nadex and the strangles and how you can trade the Google earnings release. So if you don't have a Nadex account, your first step, okay, is going to be to hop on over here to TFNN.com, click on Nadex. Once you've done that, at least demo. Okay, get a demo account, demo trading account. Click right there, fill in a username, first name, last name, phone number, and email address. They'll send you a password so you'll be able to log in. And this takes literally about 15 seconds. You can literally do it right now, and you can demo trade this trade today. Okay? And stay right there. Come back. We'll go into the next step to be ready for this trade.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Okay, so first step, like I said, hop on over to TFNN, click on Nadex, get your demo trading account. Now, if you want to trade live, you can. You can be ready to go today, potentially. Just go here, click on Create Account. Once you've clicked on Create Account, fill it out. Goes from start to funded in, about 5 minutes. So literally, you could have your account funded and ready to go. So I recommend definitely go over there, check that out, get that set up, whether it be demo or live, whatever works best for you. And only you know what you're comfortable with at this point. But I obviously suggest people do demo trade, but this is only a trade you can only do once a quarter. Okay? So just be aware, again, this is a trade you can only do once a quarter, so it's not like it comes around a whole lot for you to be able to take advantage of it. Now, after you've done that, okay, then the next thing that you're going to want to do is get access to the scanner. So if you don't have access yet, hop on over here, check out the Diagnostic Scanner. So there's a whole list of great tools offered by TFNN, and so you can get access to the scanner right there. And get immediate access, free trial, 2 weeks. Check it out. Okay? So that's your second step. So you want Nadex and you want the scanner. And you'll get access to the deviation levels, which we also use when we're looking at this trade to help us out on pinpointing the exact contract that we want to do. Now, that we have that down, let's go ahead and just talk about sort of how this works. Okay? What are we looking to accomplish? And, how can we take advantage of the earnings release coming out? Well, Google's earnings release, even though you'll see reports that say 4:30, that's when the phone call happens. Okay, that's when they do the little press conference, what you want to call it, the conference call. And so on the conference call, they'll make announcements, they'll talk about stuff, but the actual numbers, just go back and look at the charts on Google, you'll see. The actual numbers come out at 4 o'clock. So like right as that bell rings, within seconds, boom, it's out. Okay? Except for the occasional misfire. I think there was one misfire earlier this year where they shot them off like at 1 o'clock or something. However, they come out at 4 o'clock, and remember, the futures are open until 4:15. Google is obviously very heavily weighted in the NASDAQ 100. And rarely do I trade strangles on Nadex, okay? And I'm going to explain to you what a strangle is. But this is the one news announcement that I do consistently trade strangles over on Nadex. So with that, let's go ahead and pull it up and just talk about what a strangle is, how we put it together, and how I find the contracts and things that I consider as I'm doing this. And this trade has worked. Obviously, I can't tell you it's going to work today, but it's worked very well for me in the past, and been some of my best trades. So because the profit and everything can work really well. There's a few different ways to do it, so we're going to talk about a couple of those. Well, what I'm going to do is I'm going to hop over here and somewhere between 3 and 4. So I wouldn't probably 3:30, 3:45. I mean, you're going to have to sort of gauge that, but somewhere between 3 and 4, you're going to need to hop in. The closer you get to 4, in one sense, the binaries will be cheaper, increasing your risk reward, making it closer. In another sense, if there's a lot of implied volatility expected, it can actually increase right before the release comes out. So if you understand that, then what you do is go, okay, well, how does this binary thing work? What's going on? Well, when I buy a contract on Nadex, when I buy a binary, then what I'm doing is I'm saying it's going to be, greater than or less than a specific strike. So I'll be looking again at the 415 contracts, okay, right here on the NASDAQ, and I'll basically be making a decision. Now, whether or not it expires above or below it, not necessarily it, but let's look at what the possible choices. Let's just say, like right now, it was, 330, okay? Then I can look at where the market is. It's at 32.84. And I really ideally want to risk, as close to, $25 as I can. So since I know that's my risk goal, then basically what I'd be looking at right here are these two strikes. I could buy the 3,300 and I could sell the 32.68. Okay? So the 3,300 would give me a strike right at one deviation. I like that, okay? So literally right at one deviation. And what that's saying is, I believe, now this is the most basic explanation, okay, on a binary, is if I'm going to buy the NASDAQ 3,300 strike, the US Tech 100, I'm saying it'll expire greater than 3,300. I don't care if it expires greater than 3,300. I'm going to take profit before it gets there. So we'll put the other side of the strangle on when we get back from the break and talk about a few different ways to do this versus just a basic binary strangle. Stay right there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so come on back here to the Diagnostic Trading Hour. So there's a few different ways to do this binary strangle. So one of them is literally right now we actually have a pretty good setup, okay? So you can get in here and you could buy the US Tech 3300 for, I got it for $12.50. It's at $13 right now. And you could sell the 3268 for about 89 bucks, okay? So on this trade, your risk is about $25 combined, maybe a little less than that, just depending upon the exact price you get filled at. So a couple things can happen. One is you could leave it until expiration, and which means you'd have a $25 risk and you'd make $75 if it moves up or down half a deviation by 4:15. And normally I probably wouldn't even consider doing this trade except for the fact that Google earnings are coming out at 4 o'clock today. Okay? Now, that would be a very aggressive stance to put the trade on and literally wait until expiration for it to get there. So the other option is I could go in and I could set a take profit order in advance. Okay, and these are going to fluctuate quite a bit. You're going to see a lot of movement in these contracts as they start moving around. So the other option I have is I can go in and I can set a take profit. So let's see, I bought this one for $12.50. You can see right there, bought 10 contracts for $12.50. And I could set a take profit for, say, $50 on the contract. So maybe a little bit higher, a little bit lower than that, just to make sure, like, so that way if it comes up right to 1 deviation, but it doesn't break it, then I get out. So what I do is I just click right there on the price, okay? And then, let's see here, I'll open up another ticket for you. So we got the bot ones. And I open it up right here. I have a sell order now. And if I want to be, more conservative on it, I put in a take profit at 43. Okay? So $43. So I put that one in, and now that will automatically close my trade if the NASDAQ gets up here to 3,300. Actually, a little bit before 3,300, which I love because, again, that's right before the deviation level. So, which is one of these 2 points will probably be this, could be either it's going to blow through them or it's going to bounce right off of one of these 2 levels. So, conservatively, I can go in and put this order in as a take profit at 43. Okay? Now, the one I sold, I'm going to flip that around, and I sold this one over here for $88.50. And I'm going to put an order in to buy it back at 57. There we go. So right there, now I have a very simple, trade put on. It's not challenging at all to do this. Literally, I'm doing this without any stress. Just, hey, the market's moving around while it's moving around. Now, as we get closer to expiration, and this is one thing I want you to pick up, as we get closer to expiration, you may find that you can get these contracts for less. You may find closer contracts for a similar price. You also may find some really cheap ones, maybe like one strike out for $5. And you're like, you know what, hey, if I can put on a few of those, I might be able to, hold those a little bit longer, make a nice profit on them. So you could layer, and that's what I usually do, is I actually usually layer these, where I'll buy several strikes, and I'll sell several strikes. And the goal on it is actually, if my first layer gets hit, it covers the risk of all of the other contracts. So that way I'm basically break even on the first layer. But if the second and third layer get hit, then I make a lot of money. So what I'll do, personally, is I'll go in here and I'll have all these contracts pulled up. And let me just open this up for you. I'll show you. Okay, but hopefully you had a chance to get those. So we bought the 3,300 at $12.50. We put in a take profit in at 43. We sold the 32.68 around $88, and we put in a buyback at 57. Okay. So when I'm layering, I'll choose the US Tech 100 right here. Let's get rid of these. Drop the metals off there. I'll put 5 to 30 both directions. Okay, and we're just going to be looking at the 415s right now. So just to narrow it down, do that. And here are all the contracts that qualify. Now I'm actually going to remove this just so you can see that there are other wider contracts sometimes. So we're not going to get anything higher than 3304. And an important tip for you, because you may not have your account set this way, but let me see if I can bring this up so you can see what I'm talking about. There's a really important tip that you need to be aware of when you're looking at contracts, because sometimes, especially if you're looking at the platform instead of using the scanner, you can miss this. So let's go over here and let me show you what I'm talking about. Right here, there's a setting, and most people have it defaulted at 20, and they don't know it. Okay? And then you can see right here there's a page number for page 2. And so you could actually be missing out on strikes. Sometimes that matters, sometimes it doesn't. But if you don't want to have to worry about that, just go to Display, change the number to 50 per page. So no binary expiration time has more than 50 contracts. That way you will know that all the potential binaries are right there on the page. And then you can save that layout, okay, as a setting. So that way you don't have to worry about it again. But just a big tip, because that has happened before where I know I've talked to people and they're like, I can't even find the strike, and it's on the second page. That's why they can't see it. So, but over here, maybe as it oscillates, you might be able to end up getting in some of these, maybe, like right now you see some of these are $4 risk. Well, as it moves up, you might be able to get into some other ones that may be a $4 risk. And if you're able to do that, then you start adding in some layers in the oscillation leading up to the Google earnings news announcement. And again, check them, once every 30 minutes, once every hour, whatever. You can be sitting here and watching it, I guess, if you want to for the next 2 hours. But anyways, but check that out, and just make sure you set some take profits. Even if you get some of these really cheap ones and you want them to expire out of the money, I'll do that on some of them occasionally. But, I mean, set the take profit for like 90 or something. I mean, if you get some stupidly low, cheap, $5 binary or something like that. I only do those on layers. And again, I make sure that my first layer pays for my second and third layer. So, for instance, if I'm risking $25 to make $25 profit, then I want to make sure I don't risk more than $25 on my second and third layer combined. So I might end up doing like 15 on the second layer and maybe 10 on the third layer, like 7, like 8 and 7, and then like an example right here, this would be like a $7 risk, and that'd be an $8 risk. And then if I could get one more layer, which I can't right now, okay, I can't get a higher layer, I get a lower layer, 95.50. Then I could put another $5 in on that. So that way, if Google earnings disappoints, thing drops, boom, massive profits. If it flies up, then I still have massive profits. And I just want to make sure that first layer covers the second and third layer of the trade. That is the most essential part right here, okay? So if you have that down, then you got the trade. And it's really that simple. It's going to go up. And why do I use this whole, 43 and 57 rule? Well, basically the binary, one thing you can know, whether it happens now, I mean, this thing may go up there, and we may hit or take profit before earnings ever comes out, okay? But whether it happens now or later, when it gets up here, a binary contract is always going to be worth $50 when the underlying market is at that strike. So if the market's at 3,300, if NASDAQ rises up to 3,300, the binary is going to be worth $50. So this gives me a huge edge. And the reason it gives me this edge is people are always trying to figure out, okay, what's the pricing model, all that. That's the pricing model. That's the one you need to know. It doesn't matter if there's 20 hours or 5 days or 5 minutes until expiration. If the underlying market is at the strike, it's going to be worth $50. Okay? Once you got that down, then you can go, okay, well, there's bid-ask spread, which can be, $2, $3, $4, $5, depending upon the market. And what if it, misses my strike by a buck, like by 4 ticks or something? I mean, it goes, right up to 30, $2.99 and then turns around. How particular do you really want to be? Okay? So I'd rather be profitable and give up a few bucks and be conservative as, try to push it for the max dollar every time, because you can give up a lot of money trying to get a couple more bucks. And so what I'll do is I'll set a take profit. I go, okay, well, that's 47.53, maybe with bid-ask spread, and then put a few more bucks on each side. That gives me a 43.57. So if I buy, like in this case for $12 or so, I'll sell back for 43. If I sell, in this case, sold for somewhere around 80, I'll buy back for 57. And it's that is it. So people make a big deal out of that. I mean, there's not that much to it, but using the deviation levels lets me see how realistic are the prices. This is earlier than I usually get into the trade, but it's so lined up perfectly, right in the middle of the deviations, that I was like, this is a nice setup. And, of course, I'll look again. As we get closer, I'll probably look again at 3, and then, maybe 330, 345. I'll see if I can find any other trades I can add on to the position. Obviously you want to, keep your risk management in check. I've done this trade every single quarter. It's worked out very well. Doesn't mean it's going to work this time. So I always bring that up. I know it sounds sort of like what, but, you got to have that risk management reality. I don't care if something wins 80% of the time or 90% of the time or whatever. The next trade is a 50-50. It's going in the winning bucket or the losing bucket. And I don't care what your probability of past is. It's always 50-50 on the next trade, even though you've done things to increase your probability and the likelihood and, the reality that, Google moves the NASDAQ and Google moves a lot on earnings, and therefore the probability is very high that it will move up or down. It doesn't matter. You still want to have that reality check on your risk, because otherwise that one time when you go all in is the time that you blow your account up. And so risk management is everything in trading. I hear stories from traders that are knocking it out of the park, and literally making 100% on their account, in a month. I have other traders who have wiped their account out in 3 days because they have 3 losing days. Even though you look at the history, and before that they had 10 winning days. It's just because their risk management was totally out of check. And so you have to have that risk management. It literally is everything in trading. And one of the things I like about Nadex is I go in here and my risk is defined. I can't move my stops. Okay? I can't take on more risk. I can add on more contracts, but I can't go and go, you know what, I bought it at $12.50 and it's basically going to max out at a loss of 0, So I'm going to go ahead and I'm going to take a negative 20 loss. You can't add on to the loss. The loss is the loss, and that's it. Now, obviously that depends on what binary you're trading, what strategy you're using, because some binaries I will hop in and hop out, before expiration. But on strategies like this, on strangles, I'll do this. Now, why do I only do? Why did I say? Earlier said this is probably the only new strategy I can think of that I consistently will use binary strangles on. Most of them, I do straddles. Well, there's a couple reasons, but the main one is the Nadex spreads just don't give me the payoff that I want. So the way that they tick, and I mean they're great for new traders, they're great for learning how to trade, but if I go over here to the spread scanner and we pull up the U.S. Tech, one thing you'll notice pretty quick is right here, it takes in a 1. So it takes 4 ticks in the underlying market to make the same amount of money. It takes 4 ticks in the underlying market to make $1. So that's a 1-point move. What are we looking at right here? Let's look at it. We're looking at about 15 points up, 15 points down. That's what we're looking at, which is about a $15 profit if it got up or down at most. So what would that cost us if we tried to do that on a spread? So we can go over here and we look at, say, the 415s, and we'd have to find a contract that would work. Pardon me, that would give us a better risk reward. And I'm really not finding anything that's even close to that on the Nadex spreads. I love the Nadex spreads, but US Tech 100, unless you have a very small account and for regular trading, or unless you're brand new, are not my favorite contracts. But they are good for those two purposes because the tick size being so low, it's sort of like deleveraging. In order so they you can go and you can do a trade and risk $9 or $10, and so you could have a small account, $1,000 account, and trade it with decent risk reward parameters. But anyways, that's why I don't do straddles on it. And the reason I normally prefer straddles is on binaries, okay? Pretty much what's going to happen is if this doesn't reach our profit target, okay? If this doesn't reach our profit target, then this trade will lose. Okay, if it doesn't either hit 3,300 or 3,268, the trade's going to be a losing trade. Okay? Whereas on a straddle, let's say it went down part of the way, I could easily, at least on one side, break even or make a little money, possibly even break even on the whole trade on a straddle. So that's why I normally do straddle spreads, where I buy a spread above and I sell a spread below the market to do news trades. But since the US Tech 100 spreads don't work as well, and since the risk reward isn't exactly what I want it to be, then I'll go in, and again, I'll use the binaries to do a strangle on this trade. Hopefully that makes sense to you. And, if you're new to all this, just hop in here. We have education, everything built on strangles and straddles and everything else that you can take advantage of, all the tutorials. And, Nadex has a lot of education. So we're here to help you out. If you have any questions, call in or email me, and I'll be glad to help you. Okay, so we have those up, and they're doing their thing. And I'll put those right there. Just close those out. They're already working. And that wraps us up on binary strangles. So let's see here. We'll pick a few more things back up right when we get back from this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So we're just going through, we're talking about doing a strangling the binary, saying, hey, it's either going to go up or going to go down. I don't know which one, but I pretty much expect the NASDAQ to move once Google releases its earnings today at 4 o'clock. And again, don't let the press conference fool you for the 4:30. The actual numbers come out at 4 o'clock. They're really good about doing that at that exact time. Giving this trade about 15 minutes to work out. Not that if the market could move before it and we could be able to take a profit. I was sort of worried a little bit earlier in the day with the market running up so high that we weren't going to get a chance to even do the trade. Because if it goes too high, there may not be any binaries. But then it leveled off and put a mark right there in the middle of the deviation. So I'm like, that is perfect. Let's go ahead and grab it while we can. All right, so that gets you caught up on that, and let's see here. I want to go through and look at what news reports we have coming up, and we're actually going to start getting news again. Yes, the government's back open, so news will start to continue going forward. By the way, the Philly Fed Manufacturing Index came out this morning at 19.8. So the markets reacted very positively, as you can see right there at 10 o'clock. And just watch them fly. So I got a little bump and then bam. Obviously, I don't think that's the entire driving thing, but that did have a positive move on the market. And ever since that 10 o'clock report was released, the market went ahead and took off. So good news right there. You do have the RBA governor speaking out of Australia. So the Fed Fund head guy there speaking tonight at 9 o'clock. So that could cause some volatility in the Aussie. And he'll be speaking at the British Chamber of Commerce. So, of course, people will be looking for any clues on interest rates on any statements made. China is going to be releasing their GDP tonight, their industrial production, fixed asset investments. They're going to have a big press conference, all this stuff happening at 10 o'clock tonight. So that could be a bit of a market moving, add a little volatility to the FX market around 10 o'clock. Be aware of that. Let's see what we got on the docket for tomorrow. Governor Corrado is going to have a little speech out of Japan there. He's the head Fed guy in Japan, so that will affect the yen. He is due to have a speech at 2:35 a.m., and he's just speaking in Tokyo. That's all we know, but he'll be talking out there. And Canada tomorrow morning is going to have their core CPI. Usually not a big market rocker, but can be a good butterfly trade, potentially. So check that one out, 8:30 a.m., the Canada core CPI. It will cause some volatility, but usually not a whole lot. And then we got a whole bunch of FOMC members. They're going to go it's just like FOMC member day, okay? At 12:30, I don't know how to pronounce all these names, but Tarolo, we're going to have FOMC member Evans at 2 o'clock, FOMC member Dudley at 3:40, and then FOMC member Stein is going to be speaking at 4:30. Obviously, that one being after the market is closed tomorrow. But lots of FOMC member speeches, so who knows if they're going to be thrown out there in regards to interest rates. But I'm sure with Janet Yellen at the helm, don't worry, there'll be plenty of QE pumping on in for plenty of time to come. So we got that out of the way. There's nothing happening Saturday, Sunday. Really nothing that big going on. There's some small announcements. The week after, several countries are having their daylight savings time roll over, so that can have a little impact on the banks and the FX markets. But that doesn't happen until the following Sunday. We are going to get U.S. existing home sales are coming out at 10 a.m. on Monday. There's no official word on when, like NFP, because all these announcements we haven't had. NFP and unemployment rate are going to be released. You may saw at the beginning of the show I had the BLS website up. They made an announcement that it's going to take 3 days, at least 3 days after the government shutdown is over to be able to come up with the numbers. So that would put probably the earliest time we'd get the ADP, or not the ADP, the official NFP and unemployment numbers at Tuesday. But I'll keep an eye on that, and I will let you know. Y'all have a great day.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.